is Thursday, and I just wanted to take this morning to chat about some things that I'm seeing emerge out of kind of the rubble from the beginning of the week and the announcements from FHA. A lot of lenders are taking a new posture on credit score requirements and minimum credit score requirements. So I wanted to share with you what those were. Most lenders' minimum credit score was 620. What I'm starting to see here, probably with probably 8 or 9 different lenders, they've moved their minimum credit scores up to 640. So it appears that the trend, obviously, they know things before the actual general public knows them. So we could be seeing a minimum credit score requirement from FHA around 620 is probably what the guideline will call for, and the lenders are going to add their overlays on top of that just to keep their portfolios clean and give them a little bit of a cushion to where they're supposed to be with FHA guidelines. So be prepared that some of these lenders that I've talked about in the past that we've got access to that are doing credit scores down to 560 and 580, and lower than 620, those lenders more than likely will still have the lower credit score options. But they will be, if the minimum standard is 620, they'll still probably be resting at 620. And most of the other banks, like your Wells Fargos and your Chases, your Bank of America / Countrywide, the big boys are going to be up in the 640s. The jumbo type FHA loans, which we don't really see around here, we don't get those high balanced ones. Those are going to be a 660 score more than likely. So credit score requirements are increasing for FHA loans around town and around the industry. So keep an eye out for some new announcements coming your way about official, these becoming official at the FHA level, because I think they're coming soon. Also, I wanted to just share with you some of the things that I've heard going on in Washington that I heard about this morning. There's a committee that's meeting with Barney Frank, as I'm not, maybe you know who this is, maybe you don't, but he is basically the guy in charge of all the financial part of, the committee, as far as dealing with, the housing and lending and consumer, protections. And to put it simply, that's what he does. And he, being the chairperson or the person in charge of that committee, his recommendations are usually the ones that carry the most weight. And he's proposing at this point what is being called a death list, or basically a death list, where he is saying that he would like to put an end permanently to all non-banking financial institutions. And what he's referring to with some colorful adjectives is mortgage brokers. He is proposing that all mortgage brokers be put to death. And this committee, or whatever you want to call it, is constructing some legislation that would put every mortgage broker out of business. So, and under the basis of consumer protection, and I find this laughable. And hopefully it doesn't have any strength, and it won't be carried out. And he's usually known for making outlandish comments and crazy things and making statements like this just to bring attention to himself so that he can, be on the news and give, interviews and that sort of thing. So I don't know if this is actually possible for a couple of reasons. That, you've got antitrust laws in this country that are in place so that you aren't preventing competition and choice to the consumer. Because if non-banking institutions like mortgage brokers are put out of business and they are basically wiped off the planet, then you do not have fair competition. It's like when you've heard Microsoft, trying to take over, the entire software industry. It'd be the same thing that brick and mortar banks will take over the entire lending industry, and that is unfair. There's no competition, there's no choice for the consumer to make a choice as to what they actually want, because better products, lower prices, and lower fees, lower rates all exist at the broker or non-financial institution level. So by eliminating that, you are actually making it worse for the consumer, again, under the banner of we're trying to protect them. So the positive thing is that Timothy Geithner, who is the basically President Obama's right-hand man when it comes to all the financial things that are going on and policies that are being instituted, is basically saying they're looking for oversight within the financial community, but not wanting to limit competition and consumer choice. So, there is a struggle going on between these two entities as to what is best, and I believe that common sense will prevail, because the National Association of Mortgage Brokers, if this comes to a point where it actually looks like it might start moving, the National Association of Mortgage Brokers has said that they will file a lawsuit against Congress, basically, and for antitrust violation, to try and stop competition. So it probably has a long road to go before there's anything out there, but I wanted to share that with you because it's the overall tone of what's going on. Legislators are trying to make a name for themselves at this point, and they're also trying to do what is best for them, not what is best for the country or the consumer. I mean, we've got some awesome numbers that have come out for new home sales, new construction, homes that were previously owned, the sales, in those areas are increasing. Numbers are going up. So what that means is that slowly, even though our declines were very dramatic, and these increases are not a whole lot, it doesn't mean that our housing market has turned around, but it is slowly climbing out of the hole. And my take is, leave us alone. Let us keep doing what we're doing, and this thing will turn around. You keep putting more laws and legislation and rules on top of us, you're going to kill the little flame that kind of started. So anyway, that's what's happening today in the news as far as that is concerned. Also, the Fed announced, Bernanke announced yesterday in his talk to Congress that the Fed will continue to be purchasing mortgage-backed securities until March of 2010. That means that Fed money is going to be continuing to come into the mortgage industry to support, financially the purchases of those loans that are being done by Fannie, Freddie. So that's going to bring more money into the system until March of 2010. They said that they're leaving the door open if we don't want to see the recession rebound. So they're leaving the door open to continue the program if there isn't the kind of numbers they're looking for in March. But slowly they'll be withdrawing from the purchase of the mortgage-backed securities, which would lend me to believe that rates more than likely will start increasing after the first of the year. So right now we've got a perfect storm. Take advantage of it. You got that first-time buyer credit that's running out. You've got some fantastic rates that are all under 5%. You've got fairly easy credit qualifying for what is coming. So get in the boat and get down the river now, because sooner or later the dam's going to get let out, and it's going to be a major flood of stuff that's going to be coming, and you don't want to be taken by surprise. So make sure you get involved with what you can right now with your clients. Get those people who are on the fence off the fence, and let them know really this is an urgent time. There's certain things that certain people can qualify for today, and tomorrow they may not be able to. So you might be a viable buyer right now, and in 2 weeks you're not a viable buyer. So make sure you keep on your toes, and make sure that your clients are talking to their lenders to make sure that they're still approved, because every loan approval that comes out from every bank now, it says at any point in time on this approval, even though you're approved and even though you're locked, we can cancel this loan, cancel this borrower's approval, and not fund this loan. So it's the day-to-day thing right now, guys. So check out the links and docs down below. Make sure you're clicking and talking to your state representatives and letting them know how you're opposed to HVCC and how you want to support the first-time buyer credit or the extension of the buyer credit. And also check out that realtor call to action. One thing I did notice about that link yesterday, was brought to my attention by one of the viewers, was that you actually have to go in there and log in as your own person. So the link that's in there, I think it's me who's logged in at this point. So you just have to log in, put in your information, sign up, and then you can click on the place where you can send the representatives your support of that $15,000 buyer credit. So again, thanks for watching and clicking. Call me, email me if you need anything. I'm here. I'll get back to you as soon as I can. See you tomorrow.